Hey all, welcome to ShareTreck, where science meets investment. And I'm your host Raj. Friends, today we are unpacking what many are calling a done deal between the US and China. But if you look closely, it's more accurate to call this a framework for implementation, not a full trade agreement. So what's really been agreed on? What does it mean for global trade and technology? And what should retail investors be watching? That's what we talk about in this video. Let's break it down. The China-US trade agreement announced in London is being hailed by both sides as a breakthrough. It builds on prior discussions in Geneva and a June 5 call between President Trump and Xi. Trump described it as done, but in reality, it's still pending final approvals and lacks operational specifics. At its core, there is a framework, a set of key commitments to de-escalate tensions, especially around rare earths and semiconductors and tariffs. Let's start with what's arguably the biggest breakthrough, rare earth materials. China has agreed to resume full exports to the US, including rare earth magnets and other vital inputs used in EVs, semiconductors, and defense tech. These had been restricted previously by China, and this reversal significantly eases US supply chain vulnerabilities. For industries relying on clean tech, chips, and advanced optics, this is huge. Next, let us look at the semiconductor side. Been some movement there too. While we don't have the full list, the US is reportedly lifting certain countermeasures related to tech exports. Commerce Secretary Howard Lutnick said restrictions tied to older semiconductor technologies may be relaxed, which is the H200 things that NVIDIA was talking about, where they booked around 5 billion of losses. But don't expect bleeding edge AI chips to flow freely. Those remain tightly controlled. This partial easing signals willingness, not full trust. Another area of significant breakthrough is student visas. The US has agreed to allow Chinese students to continue studying at the US universities. This had become a flashpoint in recent months, so the reversal is seen as soft power concession. And now on to the tariffs. Previously, we had extreme rates, 145% US tariffs on Chinese goods and 125% Chinese tariffs on US exports. That peak has paused temporarily, and now the new framework formalizes the reduction. And here's the math. The US will implement a 55% total tariff, which includes 10% reciprocal tariff, 20% linked to fentanyl-related penalties, and 25% from the first Trump-era rounds. China will impose a 10% flat tariff on US goods. So yes, this is a reduction. But let's be real. These are still elevated trade barriers, far above pre-trade war levels. And now, here's where investors need to stay cautious. The framework does not resolve long-standing concerns about IP theft, state subsidies to Chinese companies, market access restriction for US firms, nor does it outline how rare earths and semiconductors will be implemented operationally from the point of view of the announcement that they made. In fact, some analysts have said this deal just kicks the can down the road. It avoids the July 9 deadline for tariff re-escalation, but leaves big picture disputes unresolved. So what does this mean for us as retail investors? Well, this deal reduces uncertainty, always a plus for the market. It provides some breathing room for EV and tech manufacturing that rely on rare earths. And that's the limit of the reduction of uncertainty. And again, if you go into the fine print, the easing of restriction on rare earth export is limited to 6-month renewable export permits. So please keep that in mind. AI and chip sectors looking to export mid-range semiconductor, that's another area where you have some relief. US universities are going to be able to take on Chinese students, so that enrollment revenue for universities, that's another relief. But the broader economic damage from years of tariffs and decoupling remains. Still, chains are still adapting, the supply chains are in a flux, and the fundamental geopolitical rivalry has not changed. And if you're looking at it from the point of view of, say, Chinese student, or as a parent of a Chinese student, you're going to think that there is going to be a lot of uncertainty and your child is not going to be able to study stress-free and focus on their education if you send them to United States, because 6 months down the line, if the rare earth export permits are not renewed, then, or even otherwise, Trump could suddenly pull the rug under the visa issues, and there could be problems like what the Harvard students are experiencing right now. It was never in their risk outlook that a president of United States might rescind the visas for Harvard students, regardless of which year of education they are on. So that damage is already done and that risk remains. So if you're looking at AI, semiconductor, or rare earth investments, this is a key pivot point, but not an all clear. So friends, this is my assessment. And I think as far as the retail investor is concerned, we have to stir clear of all the hype that is being generated. Trump's tweet saying that, oh, we have had a breakthrough and it's a done deal and all those things. It's not. It's just a delay of the implementation of the 90-day deadline for tariffs on China. And also on part of China, it's a delay on their 125% tariff implementation. What is clear is that there's a little bit of limited reprieve for the EV sector and the defense sector with rare earth minerals flowing freely from China again. But again, there's a 6-month license that China has given to various firms. That can be another trigger point 6 months down the line. So all that said, if you look at what is happening in California, if you look at the amount of debt that US is carrying, and the fact that Danish and Dutch funds are now planning to reduce their dollar exposure, and also the proposals within the big, beautiful bill, which aims to put taxes progressing all the way up to 20% on foreign investors in the US, you can see the writing is on the wall. And I think we have to be very careful as retail investors. We are at all-time highs. And with all these factors putting a whole lot of uncertainty into the environment, be careful. That's what I would say. Well, friends, thanks for watching this video. If you have not subscribed yet, can you please subscribe and help grow this channel? This brings me to an end of this video. Bye for now.